Mohamed, we're going to talk about what's happening in the UK in just a moment. But first, let's just talk about the markets this morning. Equities up again, and this is happening as yields are coming down around the globe. What's the message? That sounds like it's bigger than just a thought that maybe the U.S. Federal Reserve is pivoting.
So we shouldn't take much comfort from the yields coming down around the world because they're coming down on growth concerns. The European PMI numbers were horrible. Germany is at 44. And in China, while the GDP numbers beat, there's a lot of question marks about it, especially given what's happening in retail sales. I think what's happening to our market, and it's wonderful to have the best week since June, it's wonderful to see the rally continue, is that we've redefined what a pivot is. We've redefined it from meaning lower rates to pausing to slowing. And if you redefine that, then you will have a liquidity effect. And that's what we're getting. We're getting a liquidity effect rather than a fundamental effect.
In other words, we've lowered our standards and we'll take anything at this point, just stop the beatings?
Yeah, and there's reason for that because there is significant value in certain parts of the market. So yes, if you just need a catalyst. The one thing I would caution, you heard from Roger Ferguson earlier today, that this is not because of inflation. Inflation hasn't turned around. Core CPI continues to go up. This is because of financial stability. There's concern that this front-loading of rate hikes, and it's massively front-loaded, will break something in the financial system. So if the Fed does slow, it is because we have financial stability concerns.
That's really bad.
Well, it depends. I mean, if they stop it from getting worse, and if this doesn't harm us and makes us end up in stagflation, it would be good. All I want to say is this is a trilemma. It's not just growth versus inflation. It's growth, inflation, and financial stability. And somehow the Fed has to find its way through this, as does the ECB, as does the Bank of England.
I like that trilemma.
That's not a word.
That is a good one.
That's not a word.
It is now.
That's not a
the
word.
New normal.
Yes.
He's created the new normal right here on
Trilemma.
TV.
That's like refugiate. It's a darn good one.
Trilemma's a good one. It's going to wind up in Webster's. You just wait.
No, yeah, in the OED.
Oh, in the Oxford. Okay. So, Mohamed, let's talk about what's happening in the UK first up. You mentioned China. Let's talk about the UK. Let's talk about Japan, because there's some really interesting things in the Confucian sense of things.
So the UK is a better story. After the market rejected unfunded tax cuts, we probably have a return to more prudent fiscal policy, and the market has priced that in. You see that with yields, you see that with the currency, and that means the Bank of England doesn't need to be as hawkish. Japan is a different issue. Keep an eye on Japan. It is a potential source of systemic risk. Look, when you fix any price against what's happening in the global economy, in this case it's yield, it's the yield curve control, you have tensions building, and you've shown the currency. There's been massive intervention. The Japanese bond market hasn't functioned properly for weeks. So they're going to have to exit YCC. And the marketplace right now is saying anything that happens in Japan stays in Japan. Let's hope so. But the UK reminded us that cross-holdings of assets can create contagion.
So, Mohamed, you're basically saying there's still a lot of big concerns out there. Don't get too excited by this pivot because we've changed our definition so many times, and don't get too excited about the 750 we saw a gain of the Dow on Friday, and now another 250 points this morning. You're not buying it just yet?
So I'm saying if you're a tactical investor, we probably overshot, and you have some scope here. If you're a long-term investor, focus on the few names you know well and have a massive appetite for more mark-to-market risk. Because once you go outside the U.S., there are still a few issues that haven't been resolved, and they speak to spillovers for us.
Spillovers for us, but we still look like the best house in a bad neighborhood, maybe?
Yeah, the cleanest dirty shirt. We're not pristine, but we're a hell of a lot better when it comes to our growth dynamics, when it comes to our entrepreneurship, when it comes to the resilience of our companies. We are much better off than others, but we can't totally isolate ourselves from what's happening elsewhere.